Have you ever looked up at a massive, kind of ugly metal cell tower sitting out in the middle of a field or maybe perched on top of a random office building and wondered why it's actually there? I mean, you probably drive past them on the highway every single day, you see them poking up above the tree line in your neighborhood, and you just completely ignore them. We've all been conditioned to view these towers as eyesores, right? Just necessary evils of the modern tech world. But what if I told you that these heavy, ugly metal poles are actually some of the most profitable, inflation-proof, and mathematically perfect real estate assets on the planet? Welcome to the Zak Invest Explainer, where our entire mission is to simplify wealth creation and give you the step-by-step tools to build true financial freedom. Today, we are breaking down the verified, completely true story of the most profitable real estate empire on Earth.
It is a seriously fascinating question. While the mainstream financial media is completely distracted by flashy tech stocks and crazy residential housing bidding wars, a tiny oligopoly of real estate investment trusts, or REITs, has quietly cornered the market. They don't sell mobile data, they aren't building smartphones. Instead, they harbor this massive hidden secret. They quietly own the physical dirt and steel that the entire digital economy is absolutely forced to rent from them. This isn't just speculation either. This is a matter of public record, entirely verified by corporate real estate filings and financial disclosures.
To really wrap our heads around this monopoly, we first have to look at the massive corporate shift in history that created it in the first place. So decades ago, the major telecommunications companies actually build their own cell towers. They own the land, they own the steel, and they maintained all the equipment. But as the demand for wireless data exploded, they realized a fundamental truth. Maintaining thousands of massive steel structures across the entire country was a capital-intensive nightmare. So they executed a brilliantly simple strategy. Step 1, telecoms build the towers. Step 2, they sell the physical assets to newly created, highly specialized real estate investment trusts. And Step 3, they immediately sign long-term leases to rent that exact space back. This sale-leaseback strategy freed up massive amounts of capital for the telecoms to invest in their actual networks, while handing these real estate trusts a nationwide portfolio of prime, highly regulated locations.
Now, this is where the mathematical perfection of cell towers truly shines. Think about traditional real estate investing for a second. When you own a residential apartment building, you're constantly dealing with tenants who break appliances, complain about noise, and maybe even stop paying rent when the economy slows down. It is incredibly high maintenance. But cell tower real estate, it's a frictionless reality. Your tenants are multinational telecommunications corporations who sign leases that last for decades. There are zero clogged toilets to fix and absolutely zero maintenance calls in the middle of the night.
The secret to this completely hands-off model is something called the triple net lease. In a specific commercial lease agreement, the tenant is entirely responsible for all the maintenance, all the insurance, and all the property taxes. On top of that, these leases include automatic inflation-linked rent escalators. That means every single year the rent goes up automatically, perfectly matching or even beating the rate of inflation. The landlord literally does nothing but own the dirt and the steel, while a massive corporation automatically wires them vast sums of money every single year. It is basically a financial perpetual motion machine.
So the obvious question you should be asking yourself as an investor right now is, if it's so lucrative, why don't competitors just build new towers to compete? Well, the answer is immense heavy friction. You can't simply buy a piece of land and erect a massive steel tower. Local municipalities, zoning boards, and environmental agencies make it incredibly difficult to build new structures. You face endless public hearings, comprehensive environmental impact studies, and massive pushback from residents who absolutely do not want a giant metal pole in their backyard. The astronomical legal permit costs and the sheer time required make building new structures nearly impossible. Because of those intense barriers to entry, it creates a pure geographic monopoly. Once a real estate trust successfully navigates that whole maze and owns a permitted tower in a specific location, they hold a localized monopoly. Telecommunications companies can't just build a new tower right next door. They are legally and physically forced to go to the existing landlord and rent that specific coordinate. These trusts aren't just owning steel, they own the legal right to be the absolute only game in town.
Section 4. The co-location cheat code.
This brings us to the ultimate mathematical secret of this business model, and it's the one that generates profit margins rivaling the biggest software companies on Earth. Building a brand new cell tower from scratch costs a massive amount of upfront capital. You're pouring a concrete foundation, erecting tons of steel, running miles of power lines. But here is the real secret to wealth creation in this space: $0 in additional capital required. Once that heavy concrete foundation and steel are built, adding a second or third telecommunications tenant to the exact same structure costs almost nothing. The foundation is already there. The power is already running.
And think about how that profit margin expands. Your first tenant provides your base margin. But when you negotiate a lease with a second wireless carrier to attach their antennas to the existing tower, you enter high-margin territory. By the time you add a third tenant, it is almost pure profit. You are leveraging a single physical asset to collect multiple, compounding streams of rent that drop straight to your bottom line.
Furthermore, these landlords are perfectly positioned for capturing the technological revolution. When telecoms roll out new, ultra-fast wireless networks, they need more antennas and more power. The real estate trust simply upgrades the steel structure and charges massive premium rents for the newly upgraded space. The tenants have no choice but to pay. So the landlords capture the entire financial upside of the tech boom without having to invent a single piece of technology themselves.
Because here at Zak Invest, we don't just want to learn the theory, we want a practical blueprint to position our capital on the winning side. Now, you might be thinking you don't have the billions of dollars required to buy a nationwide portfolio of cell towers, but you don't need to. Here is your step-by-step strategy. Step 1. Look for publicly traded telecom REITs. Step 2. Treat them as defensive portfolio assets. Step 3. Factor in the inelastic demand for mobile data. And Step 4. Collect those inflation-linked dividends. By buying shares in these specific, highly specialized infrastructure trusts, you become the invisible sky landlord. You collect rent from the telecommunications giants without ever pouring a single yard of concrete or arguing with the zoning board.
Contrast this approach with traditional tech stocks. Tech investing can be incredibly risky and volatile. Bubbles burst, and revenues are tied really tightly to unpredictable consumer spending. But telecom REITs, they represent permanent wealth. People might cancel streaming services or hold off on buying new cars, but they will never, ever cancel their wireless phone service. It's an inelastic utility. By owning the physical infrastructure, you build a financial fortress that is unshakable and virtually immune to the daily noise of the stock market.
And the long-term growth story isn't stopping anytime soon. Just think about the timeline of this digital sky expansion. We're moving from traditional cellular antennas to digital billboards to emergency broadcast systems and massive physical infrastructure for the Internet of Things, or IoT. These trusts are exponentially multiplying their revenue per square foot by turning every single steel structure into a multi-tenant digital hub. They are literally monetizing the exact same geographic coordinate over and over again.
So, the absolutely crucial point I want you to remember from this explainer is this core investing philosophy. Stop ignoring the physical foundation of the digital economy. It is just so easy to get caught up looking strictly at the screen of your phone, but you need to see the physical toll booths making all of it work. This is the ultimate silent wealth transfer, and it is exactly where the smart money is quietly positioning itself for generational wealth.
Which brings us to our final question and a thought I really want to leave you with today. Are you ready to start collecting rent from the invisible sky? I want you to understand the power of multi-decade inflation-linked leases. Recognize those impenetrable regulatory moats. Take this step-by-step framework, shift your perspective, and start building the unshakable financial freedom you truly deserve. Thank you so much for joining me on the Zak Invest Explainer, and I will see you in the next one.